Hello everyone, welcome to EduTap and welcome to today's session. So I hope that I am visible and audible clearly. Give me a thumbs up if I am visible and audible clearly. And congratulations to all of you for clearing the phase 1 of RBI Grade B. And welcome to EduTap. So give me a thumbs up. Hello Anand, hello Sorish, good evening VTC, good evening Sorish. So today we are going to do the 100 most important MCQs for the ESI. So the ESI, we are going to cover it holistically so that you have the concept clarity, okay? So be with me till the end of the session. So now, before starting with the session, there is also one very important announcement from EduTap that we have brought for you the test series for the phase 2, so that you can practice a lot before the examination. Okay, so here we are providing you with the objective tests and we are providing you with the descriptive tests, and the best thing about the test series is that you are also going to get the evaluation. Okay, and there is also the live crash course where you are getting the live classes, short notes, mind maps, current affairs, test series and the evaluation of the test. So you can avail any of these. The test series for now, I guess it is more relevant for you as you can get to practice a lot. Okay, but if you want the holistic understanding and you want the whole of the practice, and with that you want the classes also, so you can avail the live crash course. So now we are starting without any delay, without wasting your time, because I know that your time is very precious. So here is the first question in front of all of you. So this is the first question, and we will only take 30 seconds for one question, okay? And that much time only you are going to get for one question. So here the general reduction in inflation is known as what? So today we are going to focus on the balance of payments, the fiscal policy, the monetary policy, the unemployment, poverty elevation, the measurement of growth, as well as we are going to focus on inflation. Okay, so these are some of the chapters that we are going to focus on more, as well as we are also going to focus on the sustainable development. Okay, so first question is this, that general reduction in inflation is known as. So deflation, first of all, is what? Deflation means that there is the general price level that is decreasing. Inflation means that the general price level is increasing, and here we are talking about the reduction in inflation. That is, okay, the inflation is happening, the general price level is increasing, but there is the decreased increase that is coming in the general price level. That is what is known as disinflation. That is, the inflation rate that was 8% has been reduced to 6%, and the inflation rate that was 6% has been reduced to 4%. Okay, so this is the reduction in inflation that is known as disinflation. Okay, deflation means that there is the negative inflation, or the general price level is decreasing. That is, there is some negative 2%, okay, negative 1%, that is deflation. Reflation, so here the answer is disinflation. So deflation is the economic term that is used to describe the drop that is coming in the general price level. Disinflation occurs when the inflation is decreasing. So here the right answer was C, because the inflation is reducing. Okay, reflation means that due to the fiscal policy, due to the monetary policy, the government and the Reserve Bank of India, or the monetary authority of the country, is trying to stimulate the demand, is trying to stimulate the output, and thus the prices are rising. So this kind of rise in price is actually good for the country, and this is the reflation that is usually done when the economy is in the recessionary or depressionary kind of situation. In that case, to increase the demand, there is also the price increase that happens. Okay, skewflation means that only a group of prices is increasing. Let's say only the food prices are increasing, while the other prices like the food price and the manufacturing good prices, those prices are stable. Only the food prices are increasing. So this is skewflation, that only a single commodity or only a group of commodities prices are increasing. So I hope it is very clear to all of you. Now coming to the second question, the increase in absolute and per capita real GNP do not connote a higher level of economic development if which of the following is happening. Okay, so you have to tell that. Okay, so try to give the right answer of this one. Okay, so Nilesh is saying C. In the previous question, I hope it is very clear that when the inflation is reducing, it is called as disinflation. Okay, And when the price level, the general price level is decreasing, that is called as deflation. So be very careful with these two terms. Okay, they are very confusing, but be very careful with them. So now here I am getting the answer, mixed answer. Some are saying E, some are saying C. Okay, so increase in absolute and per capita real GNP, that is per capita income, we can say the per capita income is increasing. That is good. That means economic growth is happening in our country. Okay, because economic growth is related to the GDP, is related to the GNP. But the per capita income is increasing, the economic growth is increasing, but the economic development is not happening. Economic development means what? It means that, okay, the economic growth is happening, okay, the poverty is reduced, the unemployment is reduced, the employment is increased, there is more social inclusion that is happening, there is financial inclusion that is also happening. So economic development is a broader term that I hope you all know, and the economic growth is a narrower term. Okay, so economic growth and economic development, there is clear distinction between the two. Economic growth is a quantitative aspect where we only see the GDP or the per capita income and such. The economic development is a qualitative aspect. Here the qualitative plus quantitative both aspect is being seen in the economic development, and it is a broader term where we are also catering to the poverty elevation, we are also catering to the unemployment, we are also taking care of the infrastructure so that the holistic development of the country can happen. So industrial output fails to keep pace with the agriculture output. So here we are not talking about economic development. Okay, here we are only catering sectors, different sectors. We are only caring about different sectors. So agriculture output is increasing, industrial output is increasing. This is what we want in our country, right? So they both should increase together. Agriculture output fails to keep pace with industrial output. These both does not make sense in case for the economic development. When we talk about the economic development, there should be the reduction in poverty and unemployment that should happen. So even though there is the growth that is happening in the country, the GDP growth is happening or the GNP growth is happening, the per capita income is increasing, still there is the poverty and unemployment that is increasing. Here we cannot say that there is the economic development that is happening, because economic development means that economic growth is happening, with that the poverty and the unemployment are reducing. So that's why the C is the correct answer here. Understood? So I hope there is no confusion. Economic development means that there should be the improvement in the quality of life, improvement in the standard of living of the people in the country. The poverty and unemployment should reduce. If it is increasing, if the poverty is increasing, if the unemployment is increasing, how we can say that economic development is happening? Economic growth can happen because the production is happening more. So economic growth can happen, the GDP can increase and the per capita income can increase. But the economic development cannot happen, because for that the poverty has to reduce, unemployment has to reduce. When inflation rate, next question is, when inflation rate, what inflation rate RBI is mandated to maintain in the economy? So you have to tell that what is the inflation rate that the RBI is mandated to maintain in the economy. So I'm getting very easy question, 4%. Okay, and the range, if you have to tell the range, so it is plus minus 2%. Okay, for how many years this target is set? Who decides the target, and in how many years the target is set? So that you have to tell. In how many years the target is set? 5 years. Very good. So in 5 years the target is set by the Government of India in consultation with the Reserve Bank of India, and for now the target is 4% plus minus 2%. Okay, so here in May 2016, RBI Act 1934 was amended to provide a statutory basis for the implementation of the flexible inflation targeting framework. In the flexible inflation targeting framework, there is the percentage that the RBI has been mandated to achieve, but there is also the range that has been provided, that the lower limit is 2% and the upper limit is 6%, that is 4% plus minus 2%. Okay, once in every 5 years, the inflation target is decided by the Government of India in consultation with the Reserve Bank of India. Next question in front of you is from the unemployment. The type of unemployment that arises during the transitioning period from one job to another is known as what? This you have to tell. So you have to tell the type of unemployment that arises during the transitioning. If I leave my job and if I'm searching for some another job, that means I'm what kind of unemployed. Okay, I have left my job, let's say, and it takes me 1 week to join some other job. So for that 1 week, I'm unemployed, I'm not earning, I'm not working. So what is that kind of unemployment? Yes, Sumit has given the right answer, Gigi has given the right answer. It is actually frictional unemployment. Okay, when you leave your job and in search of some other job, that is the frictional unemployment. Now some students are saying it is structural. Structural means that when the skill set is different, or the skill set that is required in the market is different than the skill set that is present with the people. Okay, so then there is the structural unemployment. Like in the era when the computers were introduced, so the people had the skill for the typewriting. Okay, they were using the typewriters. Now the typewriting skills have become obsolete because now you need to have the skill set of using the computer. So that is the structural unemployment. You have lost your job because you only knew about the typewriters, you only had the skill of typewriters. So when there is the skill difference, then there is the structural unemployment. Cyclic unemployment is because of the business cycles. When there is boom, there is less unemployment. When there is recession or depression, there is more unemployment in the country. So that is cyclic unemployment. Because of the business cycles, the unemployment is coming in the economy. Disguised unemployment, when you seem like you are working but actually you are not working. So that is disguised unemployment. Okay, in the disguised unemployment, you seem like working, like in a field there are 10 people that are working but actually only 2 people are required to work in that field. That is disguised unemployment. Okay, because 8 people are actually not contributing anything in the production. Next is, which of the following is the correct formula for finding the unemployment rate? So here you have to tell the formula of the unemployment rate. So the unemployment rate, the formula is the unemployed workers divided by the total labor force multiplied by 100. Okay, so that is the unemployment rate. You have to find the unemployment rate. So you need the unemployed workers, that okay, there are 100 unemployed workers out of the total labor force. That is the total number of people that are willing to work or that are working in the country. Okay, so let's say out of 200, there are 100 people that are unemployed workers. Okay, so you have to, from the total labor force, the unemployed workers is being divided by the total labor force multiplied by 100. So that is the unemployment rate. Okay, so unemployment rate, it is the percent of the labor force that is without work, that are willing and able to do work at the current wage rate. So unemployment means the people that are willing and able to work at the current wage rate are not able to find the work. Okay, so that is unemployment. Okay, so labor force, you can see that it is the total number of people that are employed. That is, labor force is actually equal to the employed workers plus the unemployed workers, that are the people that are seeking for employment in a country or region. So the labor force constitutes, or it is the employed workers plus the unemployed workers. So it is the total labor force that is present in our country that is either seeking work or that are actually working in the country. Okay, next question is that the National Sample Survey Organization that releases the data for the economic growth, or that releases the data for the GDP and the gross value added, comes under which of the following ministries of the Government of India? So here I am getting the answer A. That is very easy. It is Ministry of Statistics and Program Implementation. Okay, so you need to have the basic understanding of the important organizations and the important institutions. Next is, arrange the following committees in chronological order in terms of their formation. Okay, here was a single mistake. So can anyone tell me that what is the mistake in this question? First of all, can anyone tell me that what is the mistake in this question? Here, try to tell me that what is the mistake in this question. Yes, yes, very good, Abhishek. Yes. So it is, see, the NSSO is not anymore there. It is the National Statistical Office. Okay. So be very careful with the words. So it can come in the question form also, that the National Sample Survey Organization is being converted into the National Statistical Office. Okay. Yes, yes, very good. So the CSO and the NSSO got merged, and now we have the NSO that is under the Ministry of Statistics and Program Implementation. Okay. So yes, you need to have the basic understanding of this. So here it should be National Statistical Office. Okay. So here I am getting the answer A. That is absolutely correct. So first there was the Alak Committee. Then there was the Lakdawala committee, then there was the Tendulkar committee, and then there was the Rangarajan committee. So Alak committee has given the idea regarding the calorie based consumption, that is the minimum expenditure that is required to meet the minimum calorie requirement per person per day. What is the minimum calorie requirement for the rural and the urban areas? Who can tell me? The minimum calorie requirement for the rural and urban areas. So for the rural areas, it is 2400 calories per day per person, and for the urban areas, it was 2100 per day per person. The Lakdawala committee said that, okay, the Alak committee is saying correct that we should have the calorie based consumption poverty line, that is the expenditure based poverty line. For the rural and urban areas, but the poverty lines should be state specific, because in different countries there is different expenditure that is needed for getting this much of the calories. Okay, because in different states there is the different prices for the commodities, so the expenditure will be different on the consumption. Okay, so there should be state specific poverty lines. Then there came the Tendulkar committee, which said that we should have 1 year time period for the 5 important commodities such as the clothing, footwear, and we should also take into account the education and the health services, as well as we should also take into account the durable goods, as well as we should have the 30 days time period for the food items and for the other oil and such fuel kind of items. So for the other items we should have the 30 days time period. So Tendulkar committee gave the mixed reference period, and this kind of poverty line that is dependent on the 1 year time period on some goods and the 30 days time period for some goods. So the poverty that depends on the basket of goods, which kind of poverty it is? It is absolute poverty, it is relative poverty, it is multidimensional poverty, it is which kind of poverty, that you have to tell me. Which kind of poverty it is? The Rangarajan committee has given the modified mixed reference period, in which the Rangarajan committee said that, okay, 365 days for the 5 commodities, 7 days for the eggs, for the edible oil, for the vegetables, fruits, and 30 days for the other kind of food material and such. Okay, yes, it is known as multidimensional poverty when we are talking about the clothing, when we are talking about footwear, when we are talking about education, when we are talking about health and the durable goods. So from the Tendulkar committee, before the Tendulkar committee, the Alak committee, the Lakdawala committee, they were only focused on calorie based consumption. They were only focused on consumption. But from the Tendulkar committee, there came the concept of education and health also. Okay, so you have to be again specific about this. So first came the working group. This was the first working group, that first committee working group that provided the poverty line, but it was not vastly accepted. The VM Dandekar and N. Nath, they have given, it was a study that was conducted by them. They had given the calorie based poverty line, but it was same for the rural and urban areas. Okay, then there came the Dr. YK Alak committee that has given the calorie based poverty line, that is the poverty line that is based on the expenditure that is done for the calorie intake, for the minimum calorie intake. So they gave for the rural and urban areas, that for the rural areas the calorie intake should be this much, and for the urban areas the calorie intake should be 2100. Lakdawala committee said that for the rural and urban areas, yes, there should be calorie based or the expenditure based poverty line that is dependent on the minimum calorie intake, but this should be state specific. Then the Tendulkar expert group has given the mixed reference period, and the Rangarajan committee has given the modified mixed reference period. Mixed reference period 1 year and 30 days, and the modified mixed reference period was 1 year, 30 days and for 7 days. Okay, so I have explained you the brief points of all the committees so that you have the clarity. Okay, next is consider the following statements and which of the statement is or are incorrect, that you have to tell. Okay, so you have the given time period, so read it and try to answer. So national poverty headcount ratio is the percentage of the population living below the national poverty line. The Lorentz curve defines the relationship between the cumulative portions of the income as received by the cumulative population, when the income earning population is arranged in ascending order. Okay. Yes, I'm getting the answer D, and that is absolutely correct, because the second statement is wrong and the third statement, see, relative poverty is what? Relative poverty means that we are measuring two things. Here there is no talk of measurement. Here we are only talking about the minimum amount of income. That is, we are talking about the absolute poverty that is dependent on the income or calorie intake and such kind of thing. Okay, so here when we talk about the relative poverty, there should be some comparison, but here there is no comparison that is being talked about. That's why only the first statement is correct, that is the national poverty headcount ratio is the percentage of the population that is living below the national poverty line. So that's why it is known as head count ratio. Okay, we are counting the people in the population that are living below the poverty line. Okay, that are not able to achieve the minimum calorie intake, or that are not able to achieve the minimum expenditure on the consumption. So the national poverty headcount ratio is the percentage of the population that is living below national poverty line. Lorentz curve calculation provides an innate and complete understanding of the income distribution. Okay, so we take the percentage of income that is being given to the percentage of population. Okay, so 70% of the population has 25% of the income, and so the 30% of the population has most of the income. That you can understand from this graph. So this is the Lorentz curve that shows the income distribution. Relative poverty is the condition in which people lack the minimum amount of income needed in order to maintain the average standard of living in the society in which they live in. So in the relative poverty, when we are talking about the income or the consumption, so we are comparing one group with the other, that they are not able to have this much income as compared to the other group. Okay, so relative poverty means that there should be some comparison. Next is, so here you can know more about the poverty. I have given you some definitions that you can use in your descriptive answer writing. So these are some definitions that you can read. Okay, now next is, in this type of unemployment, unemployed person is the one who seems to be employed but actually he is not. His contribution to the total output is zero or negligible. So which Yes, here the answer is disguised unemployment. Okay, so the disguised unemployment is the type of unemployment where you seem to be working but you are not actually contributing in the production. So if the 10 people are working in the field where only 2 people are required, so you can understand that there are 8 people that are actually disguised unemployed. Okay, next, so you can read about the disguised unemployment. I have given you the brief understanding. Yes, in agriculture in rural areas, usually the disguised unemployment happens. Okay, which one of the following is the correct sequence in the decreasing order of contribution of different sectors to the gross value added of India? So in the GVA, in the gross value added, you have to tell the contribution in the decreasing order. So I'm getting the answer A, that is correct. The services has given the highest contribution in the GDP or the GVA, then the contribution is made by the industry, and then there is the contribution that is done by the agriculture segment. Okay, so here the answer is correct. So here the data you can see that for the 2022-23, for this financial year, 18.3% of the GVA, the share in the GVA of the agriculture sector, or the share in the GDP of the agriculture sector, was 18.3%. In the industry for 2022-23, the share of industry in the GVA was 30%. For 2021-22, the share in the GVA was 53%. Okay, so this was the original data that I was able to find, and this data points you can use in your examination also, okay, in the descriptive answer writing. So next is, which of the following is incorrect regarding wholesale price index? So you should have the basic information about the WPI, about the CPI. So try to give the right answer of this question. It is published by the Office of Economic Advisor, Ministry of Commerce and Industry. So this is correct. The base year for WPI is 2011-2012. That is correct. It includes goods only. That is also correct, because in the wholesale price index there is no services that is taken. Okay. The highest weightage in the index is given to the manufactured articles or the manufactured goods. Okay, so D is incorrect. That is yes, very good Nilesh, very good Sorish, absolutely correct. Yes. So wholesale price index, I have given you the brief understanding here. So here you can see that the components or the basket that is taken in the WPI is for the primary articles, fuel and power, and the manufactured products. The manufactured products has the highest weightage in the WPI index. Now who can tell me that the CPI for the industrial workers and the agricultural laborers, for this, who releases the CPI for the industrial worker and the agricultural laborers? Who releases the CPI for the industrial workers and the agricultural laborers? And in the CPI, these are the components, or these are the basket of goods. Okay, so in the CPI, the food and beverages has the highest weightage, and then there is the miscellaneous, that is the services. Second is the services, that is the highest weightage, and so on and so on. So I'm getting the answer Labor Bureau. That is absolutely correct. For the CPI for the industrial workers and the agricultural laborers, the data is published by the Labor Bureau, or the data is provided by the Labor Bureau. Okay, for the CPI for the rural, urban and combined, there is going to be a question coming ahead. So for that you will tell then. Okay, so now coming to the next question, that is Montreal Protocol aims to achieve which of the following? So currently we are talking about the sustainable development, we are talking about the greenhouse gases. So these are the hot topics at the current time. Okay, so you need to be aware about the sustainable development, about the green deposits, about the green finance, and so here is a question related to that in front of you. So try to give the right answer of this one. So I'm getting the answer B, that is absolutely correct. And now who can tell me that which was the agreement that has amended Montreal Protocol? So there was an agreement that provided the amendment to the Montreal Protocol so that the greenhouse gas, there was a particular greenhouse gas can be reduced. So who can tell me that which agreement we are? Yes, very good Priyanka and Sorish, it was Kigali Agreement. So first of all, let's talk about Montreal Protocol. So the Montreal Protocol was signed to protect the ozone layer from the ozone depleting substances such as the chlorofluorocarbons that were released in the air and the chlorofluorocarbons. So the chlorofluorocarbons and the hydrochlorofluorocarbons, they were released in the atmosphere and they were depleting the ozone layer. That was harmful for the human beings, for the living beings. Okay, so to protect the ozone layer by phasing out the production and the consumption of the numerous substances that were the ozone depleting substances that are responsible for ozone depletion, this was the idea for the Montreal Protocol. It was seen that the chlorofluorocarbons, they were replaced with the hydrofluorocarbons. Okay, the chlorofluorocarbons and the hydrochlorofluorocarbons were replaced with the hydrofluorocarbons that was actually a greenhouse gas. So Kigali Agreement was brought to amend the Montreal Protocol so that we can even stop this hydrofluorocarbon, that is the greenhouse gas that can lead to the climate change, that can lead to the global warming. So I hope you have got the brief understanding. Yes, very good. So the HFCs increase the greenhouse effect, and that's why Kigali Agreement was brought to stop this hydrofluorocarbons also. Okay, so this is the basic idea. Next question is, So next question is the money multiplier in an economy increases. So see, I am giving you the static point of view. The current point of view you have to be aware about, okay? So that if any recent report has come up that how much is the percentage of the ozone depleting substances has been reduced and such, okay? That greenhouse gases has been reduced by such and such. So those data points you can use in your answers, okay? So be aware about the current point of view. I am giving you the static idea, okay, that you have some points to give. So the money multiplier in an economy increases with which of the following, with which one of the following. So money multiplier in an economy is increasing, okay. Money multiplier is what? It is the banks that are using the credit creation to provide the have the more money in the economy, okay, to increase the money in the economy. That is the money multiplier. So they do the banks do the money creation, okay. That is only in the papers. That is not the actual money creation that is happening. That is usually done by the RBI. So the banks are doing the money creation through the credit creation. So here I am getting the answer B. That is absolutely correct. If the increase in CRR is happening, you can understand that the cash reserve ratio will increase. That means the bank will have. So CRR is what? It is the percent of the net demand and time liabilities. That is the percent of the liability of the bank is what? It is the deposit. So percentage of the total deposits or the net total deposits that is kept with the bank. So if there is the more CRR that has to be kept with the bank, more money that has to be kept, with the RBI. CRR is the percentage that has to be kept with the RBI. So if more money has to be kept with the RBI by the banks, then the banks will have less money to lend. So credit creation will be low. So the money creation will be low. Increase in banking habit of the population. If the banks are depositing, if the people are depositing more money in the banks, that means the credit creation can happen more, the banks can lend more. So yes, this is the correct answer. If the SLR is increased, that means the percentage of the NDTL that the banks have to keep with themselves. The percentage of the deposits that the bank have to keep with themselves, if this increases, then you can understand that the banks will have less money for the credit creation, less for the money creation. So here, if the population is increasing but the population is not depositing the money in the banks, then the credit creation cannot happen more. Or the population is increasing, that means consumption is increasing, that means saving will be less. So again, the deposits with the banks will be less. So that's why only B is the correct answer. Ma'am, this money is broad money. See, M3, it is M1 plus the time deposits. So M1 consists of the currency with the public, currency I have in my hands, the demand deposits, plus it also includes the other deposits. So in the demand deposits and in the time deposits, that means these are deposits of the bank. So NDTL is the time deposits, demand deposits minus the deposits of the bank with the other banks, okay. So the time deposits plus the demand deposits are a part of the net demand and time liabilities. Out of these total deposits, that are the time deposits like the fixed deposits, recurring deposits and the demand deposits, from this total deposits a percentage has to be kept with the bank itself, that is statutory liquidity ratio, and the bank have to keep a percentage, like the total deposit is 100 and from this the CRR is 4.5%, that is 4.5 rupees the bank has to keep with the RBI. So this is the brief idea. I will explain you it in the coming slides also. In the context of Indian economy, the open market operation, very easy. Open market operation means that there is the purchase and sale of government securities that is done by the RBI. So RBI do the open market operation. The purchase of government securities means that the RBI is giving the money. The RBI is giving the money to the banks or giving the money in the economy. Because the RBI is purchasing the government securities, that means the money is getting released in the economy, okay. So the RBI is selling the government securities, that means the RBI is taking the money from the banks. The RBI is taking the money from the banks. So when the RBI wants to suck the liquidity out of the economy, the RBI will sell the government securities, and when the RBI wants to provide the money in the economy, the RBI will purchase the government securities, okay. Next is any kind of question that you have, we will cater to that question by the end of the session. Otherwise it will disturb the flow of the session. Okay, so what will happen if so if you have a question regarding the question that we are discussing, that is fine, but if you have some other question, we will take it after the at the end of the session. Okay, what will happen if the interest rate is decreased in the economy? So I'm getting mixed answers here. Some are saying B, some are saying C. Okay. If the interest rate is decreasing, how the savings are going to increase? Why will I save when I know that I'm only getting 1% and now I'm getting 0.5% on my savings? So the C cannot be the answer, na? Read the question very carefully. What will happen if the interest rate is decreased in the economy? If the interest rate is getting decreased in the economy, decrease the consumption expenditure of the economy. So that is not related to the interest rate. Okay. Increase the total savings in the economy. When the interest rate is decreasing, why will you want to save in the banks when they are providing such less interest rate? Decrease the inflation in the economy, in the country. So for decreasing the inflation, the Reserve Bank increases the repo rate to increase the interest rate in the economy. To decrease the inflation, the interest rate has to be increased so that people take less loan, because when the interest is high, people will take less loan. When the people are taking less loan, they will have less money to spend. So that's why the demand will decrease and the inflation will decrease in the economy. So interest rate has to be increased for decreasing the inflation. So here the correct answer is B only, that if the interest rate is decreasing, you will take more loan. When the interest rate is less, you will take more loan to have the house, to build the house, to build the factory, to buy the machineries and such. So when interest rate is less, there is more investment expenditure that happens in the economy. Whenever we talk about interest rate without specifying that we are talking about market and such, so interest rate will always be mentioned with the deposits. Okay, whenever we talk about interest rate without any mention of the financial markets, that means we are talking about the economy. That means we are talking about the deposits, the lending rate and the deposit rate. Okay, so that is the basic idea. Okay, whenever we talk about GDP without mentioning market price or the factor cost, that means we are talking about GDP at MP. Okay, so that is some basic ideas in economics that you need to have. So here the B is the correct answer. For decreasing the inflation, you have to increase the interest rate. Next is dumping in the context of international trade means what? So in the past few years, the dumping was a very hot topic in the international community because China was doing lots of dumping in many different countries. Still dumping is happening in our country also and in many other countries also. So in the international trade context, you have to tell that what dumping means. Okay. Yes, I'm getting the right answer. Very good. Dumping means that the sale of goods abroad. So China was doing the dumping. That was China was selling the goods abroad at a lower price below their cost and price in their home market, so that the China can capture the markets abroad, the foreign markets, and can create monopoly in the foreign markets, because the other traders, they will not have that kind of advantage. Okay, they will not have that kind of leverage to compete with the China that is providing the goods at a very low price. Okay, so dumping means that when you are selling the goods abroad at a lower price than what you are selling in your own home country. Okay, so that is dumping. So this was the basic idea that you needed to have. Which of the following is not a component of India's foreign exchange reserve? So now you have to tell me this. So here we are trying to cover all the concepts. Okay, so that you have the basic idea. Because from the static point of view, if you have the clarity of the concepts, you will be able to answer any kind of question. Okay. So here I am getting the DE answer. That is correct. So India's foreign exchange reserve consists of the foreign currency asset, the SDR, that is the special drawing rights. The gold reserves are also kept in the India's foreign exchange reserves, as well as India's reserve position in the IMF. So the SDR, this was the report that was recently released, and that's why you need to have the basic understanding that okay, the foreign exchange reserves consist of what. So they consist of the four important things, that is the foreign currency asset, the gold, the SDR, the reserve tranche position. Okay, so reserve tranche position is a portion of the quota in the IMF that, like, India is providing some money in IMF. All the countries are providing some money in the IMF. So out of that quota of the currency that each member country must provide to the IMF, from that quota a portion is reserved for the particular country. So if India is providing $75 million, let's say, so from this $10 million will be saved for India, so that India can take this. It is the reserves for India only, so that the India can take this whenever India require. So reserve tranche position is actually a portion of the required quota of currency each member country must provide to the IMF. Special drawing right, it is actually, we are going to discuss this, and I'm going to put 2-3 questions regarding the SDR because it is important. So let's discuss it there only. Okay, so we are going to specifically discuss SDR. What kind of policy involves raising taxes or cutting government spending so that it cuts up to the on the aggregate demand? Thus economic growth to reduce the inflationary pressures in the economy. So I will say that be very careful when you are reading the question and when you are reading the options. Here we are talking about the government, we are talking about the policy, government policy. That means we are talking about the fiscal policy and not the monetary policy. How it can be E? See, in the examination, I know that you will want to be very fast and you can make such mistakes. So be very careful, okay? So I know that this is very easy question and you know about it. So do not make mistakes when you know the answer and when you know about the concept, okay? So government, whenever we talk about the government, it is fiscal policy. Whenever we talk about RBI, it is the monetary policy that we are talking about, okay? So in the fiscal policy, there is the expansionary fiscal policy and there is the contractionary fiscal policy. The expansionary fiscal policy means the government is increasing the government spending, the government is doing more expenditure, and the government is reducing the taxes, and or the government is reducing the taxes. Contractionary fiscal policy means that the government is decreasing the government spending and or the government is increasing the taxes. So which kind of policy involves raising the taxes and cutting the government spending? So it is contractionary fiscal policy, okay? So contractionary fiscal policy and expansionary fiscal policy, you can see that whenever we talk about fiscal policy, we are majorly talking about the two very important instruments of the government of our country, that is the expenditure that is done by the government and the taxes that is taken by the government, okay? Next is there has been persistent deficit budget year after year. Which action or actions of the following can be taken by the government to reduce the deficit? So try to give the right answer of this one. Okay, I am getting the answer B and that is not correct. A, yes. A is correct. So here deficit. To reduce the deficit, what should be done? Deficit means what, first of all? Whenever you have the confusion, now try to break it down in very easier terms. Deficit means expenditure minus receipts. That means if we want to decrease the deficit, that means we have to decrease the expenditure and increase the receipts. Reducing revenue expenditure, that means we are reducing the expenditure. Very good, tick. Introducing new welfare scheme means that expenditure will increase of the government. We do not want to increase the expenditure, so this should not happen. Rationalizing subsidies, that means we should only provide the subsidies to the group or to the section of the population that is actually requiring that kind of subsidy. Like the LPG subsidy should only be given to the section that actually requires that subsidy. Okay, so rationalizing subsidy is true because this will decrease the expenditure if we are taking out the extra people out out of that subsidy. Reducing import duty will reduce the receipts, and that we do not want to do. We want to increase the receipts. So 1 and 3 were correct, and that's why A is the correct answer. Which of the following can be used as counter-inflationary tool? That is, to fight the inflation, which tool can be used? To fight the inflation, which tool can be used? So let's be a little faster now. Okay, increase in government expenditure. If the government is spending more, the demand will increase. When the demand is increasing, the prices will increase in the country if the supply is not able to increase with the pace. Cutting tax rates. If the tax is being reduced in the economy, when the tax is being reduced, again the demand will increase because the people will have more money. Increase in Manrega wages, the people will have more money, they will demand more, prices can increase. Decrease in LPG subsidy. When the LPG subsidy will decrease, the people will have to spend more on the single product, and that's why this can control the inflation, as the consumption of the other goods will decrease as the people will have less money with themselves. So D was the correct answer here. Okay, D was the correct answer because decrease in LPG subsidies will lead to less disposable income in the hands of the people, which will in turn lead to less demand and lower inflation in the country. Which of the following best describes the meaning of accommodative monetary policy? When a central bank attempts to expand the overall money supply when growth is slowing. So when the growth is decreasing, then the money supply needs to be increased. Money supply is increasing, that means the people will have more money in their hands, they can demand more, and that's why when they are demanding more, the production will increase, the supply will start increasing, and it will increase growth, because growth is directly related, the GDP is directly related to the production that is happening in the country. So the A was the correct option here. Okay, so you can read about the different stances. The accommodative stance is of the central bank when central bank is expanding the money supply. Neutral stance when the central bank is not cutting or increasing the rates. Hawkish stance when the central bank wants to decrease the inflation, and that's why the central bank is going to increase the rates in the country. Calibrated tightening means the government will see the position of the country in the coming years, and then the government will think that the government has to increase the repo rate or not. Decreasing, it's out of the table, but has to increase or not. The term national income represents. So there was such a question in 2018 and such, 2018-2019. So that's why you need to have the basic understanding of the conversions. So from the gross national product market price, you have to go to national income, that is the NNP at FC. So from the market price, you have to go to the factor cost. That means you have to deduct the indirect taxes. Whenever from the market, you are going to the factory. That means indirect taxes has to be deducted, but because that is only present in the market. Adding the subsidies. So from the market price, if you want to go to the factor cost, you have to deduct the indirect taxes and add the subsidies. From the gross, you have to go to net. That means you have to deduct depreciation. So the correct answer here is C. Gross national product at market price minus the depreciation minus the indirect taxes and plus the subsidies. Okay. So whenever you have to go from the gross to net, you have to take into account depreciation, domestic national net factor income from abroad, market price, factor cost, you have to take into account indirect taxes and subsidies. Okay. The next is there will be dash budget if the capital receipts and the revenue receipts are greater than the capital expenditure and revenue expenditure. So which kind of budget is this? It is a surplus budget, it is a deficit budget, it is a neutral budget, or this is some kind of deficit that is happening. So here A is the correct answer, surplus budget, because the receipts are greater than the expenditure. So whenever the receipts are greater than the expenditure, it is a surplus budget. Whenever expenditure is greater than receipts, it is a deficit. Okay. The Sustainable Development Goals or the global goals are a collection of 17 interlinked global goals, and the first global goal is no poverty. This is designed to be a blueprint. So Sustainable Development Goal is designed to be a blueprint to achieve a better and more sustainable future for all. These goals are intended to be achieved by which year that you have to tell? 2030, very easy, yes. By 2030, it is said that we want to achieve the 17 goals. When it was introduced, when was Sustainable Development Goals were introduced, that you have to tell? So The United Nations Sustainable Development Goals are targets for the global development. This was adopted in September 2015, said to be achieved by 2030. Okay, so you need to have the basic information about the Sustainable Development Goals. Which measure is followed by the government to control inflation? So which measure is followed by the government to control the inflation? So government can also control the inflation through which measure? So the government will have to decrease the demand. How can government decrease the demand? Because when the demand is decreasing, the prices will start decreasing. D, yes, it is correct that increase the taxes. The government can increase the taxes. People will have less money in their hands. So the demand will decrease. CRR, repo rate, reverse repo rate, these are all the tools of the Reserve Bank of India. So CRR, repo rate, SLR, these are the tools with the Reserve Bank of India, and the taxes and the government expenditure are the tools in the hands of the government of India. Okay. Next is, which of the following best describes the meaning of fiscal deficit? So you have to be careful with the formulas. Okay. So here is a very easy question. The excess of revenue expenditure over revenue receipts. So when the revenue expenditure is greater than revenue receipts, so this is revenue deficit. Capital expenditure over the capital receipts, so this is capital deficit. Excess of total expenditure, when the total expenditure is greater than the total receipts excluding borrowing. So this is fiscal deficit, as this shows that, okay, the total expenditure is 100, the total receipts excluding borrowing is 75. That means the fiscal deficit is 25, that is the borrowing requirement for the country is 25. So actually fiscal deficit shows the borrowing requirement of the country. So fiscal deficit has the formula total expenditure minus total receipts excluding borrowing. Okay, and the fiscal deficit actually shows the borrowing requirement of the country. Total expenditure minus total receipts is the budget deficit. Okay, so there is a difference between the budget deficit and fiscal deficit. Along with the budget, the finance minister also places other documents before the parliament, which include the macroeconomic framework statement. So with the union budget, there is also the release of the document, that is the macroeconomic framework statement. The aforesaid document are presented because this is a mandated by which. So you have to tell that. So I'm getting the answer D here. That is absolutely correct. The FRBM Act 2003, this is the act that provides for ensures the fiscal discipline, the discipline of the government, that it should not borrow extensively, it should not make deficit extensively. So this is for the FRBM Act is for the fiscal deficit. So under this fiscal deficit, the macroeconomic framework statement that is mandated to be released with the union budget. Okay. Next is, which of the following is correct regarding the effect of increase in CRR? So I have told you that increase in CRR, increase in SLR, increase in repo rate, increase in standing deposit facility, increase in these rates. So what is happening, that the CRR bank will have less money. The bank have to provide more money to the RBI. Bank have to deposit more money with the RBI. SLR means bank will have to keep more money with itself. So the less money will be left to lend. Repo rate is increasing, that means the rate at which the banks borrow from the Reserve Bank of India is increasing. That means the bank will also lend at greater rate. So the higher rate will be there in the economy and people will not want to take the loan at the higher rate. So the lending will decrease. In the SDF, that is the deposit rate, if the RBI increases the deposit rate, that means the banks will be very excited to deposit with the RBI because they are getting more interest from the RBI. So this is the SDF, standing deposit facility. Again, the lending will decrease because the banks will use their money to deposit with the RBI. So increasing CRR means that decrease in the supply of money in the economy because the banks will be lending less in the economy. So here the correct answer was B. Yes. As part of 2030 Agenda for Sustainable Development, what is the total number of targets to be achieved under the 17 SDGs? So the 17 Sustainable Development Goals has to be achieved, and for this there are the 169 targets that has been given. So to achieve the 17 Sustainable Development Goals, there are the 169 targets that has been provided. Okay. So next is, with reference to Fiscal Stability and Development Council, consider the following statements. It is an organ of Niti Aayog. That cannot be true because the FSDC was introduced before Niti Aayog, and the FSDC is chaired by Union Finance Minister, while the Niti Aayog is chaired by the Prime Minister of the country. The Financial Stability and Development Council, it monitors the macroprudential supervision of the economy. That is true. So the second and third statement are true for the FSDC, and that's why yes, absolutely correct. The C is the answer. Okay. So this is the brief idea of the FSDC. Okay. The subcommittee of FSDC is headed by the Reserve Bank of India's governor. The next question is, absence of minimum income to get the minimum needs of life is concerned with which of the following type of poverty? So it cannot be relative poverty because we are not comparing or different minimum incomes or the different groups. It cannot be situational poverty because here no situation has been mentioned that because of COVID, because of this or because of that, the problem has come. Intergenerational poverty, we are not talking about the generations. Multidimensional poverty, we are not talking about different aspect of poverty. We are only talking about minimum income. So here we are talking about the absolute poverty. This is the absence of minimum income to get the minimum needs of life. Okay, so by the name itself you should be able to tell that which kind of poverty it is. Lending to which of the following sectors is not a part of priority sector lending? Again, the priority sector lending targets, the priority sector lending, this is very important concept. Okay, so here try to give the right answer of this one. So the which not a part of priority sector lending. So I'm getting the answer D, that is absolutely correct. So there are the agriculture, MSMEs, export credit, education, housing, social infrastructure, renewable energy. So these are the priority sectors in our country, and they are the ones that are given the priority in our country, and that's why a percentage of the credit has to be given to this priority sector. Okay. Coming to the next question, with reference to marginal standing facility, consider the following statements. So the MSF is a facility for interbank borrowing. Is it true? The purpose of marginal standing facility is to reduce the volatility in the overnight lending rates in the interbank market. So is it true? The marginal standing facility rate is generally lower than repo rate. So which of the following is true? Which of the following is correct? Marginal standing facility rate is lower than repo rate. So I'm getting the answer B, that is correct. Okay. So the answer B is correct. See, first of all, the marginal standing facility is a facility that is provided by the Reserve Bank of India for the banks. The banks can take the money from the Reserve Bank of India. The banks can borrow the money from the Reserve Bank of India when the interbank liquidity has been dried up. Okay, so marginal standing facility is a facility of the Reserve Bank of India for the banks in the emergency kind of situation. The purpose of marginal standing facility is to reduce the volatility in the overnight lending rates in the interbank market, because the other banks will say that okay, if you need money, give us very high interest rate, and when a bank is in the emergency kind of situation, so the bank will agree. So to stop that kind of situation, to stop that kind of harassment also, so this is the RBI facility, that is marginal standing facility. Marginal standing facility rate is generally higher than the repo rate by 0.25%. So the standing deposit facility, then there is the repo rate, and then there is the MSF. So MSF is greater than the repo rate by 0.25% and SDF is less than the repo rate by 0.25%. Okay. So here the call money, notice money and the term money, they were in news recently, so you need to have the basic understanding of these terms also. Okay, next is with respect to inequality measurement, consider the following statements, and with respect to the inequality and inflation. So try to give the right answer. Joya, what you are not able to understand? Tell me. See, the MSF, marginal standing facility, is the provision that is provided by the RBI so that the banks can take the lending from the RBI, the banks can borrow the money from the RBI when the banks are in some emergency kind of situation. When there is the interbank liquidity that has dried up, that is the other banks are not providing the money to this bank. They do not have money to provide the lending to this bank. So the bank in the emergency situation can go to the RBI and can take the loan, can take the borrowing under the Martian Standing Facility. Okay. So here Lorentz curve, it calculates the degree of income inequality. So here I am getting the answer C. Which of the above statements are correct? So C is not correct. Priyanka is saying B. That is correct. Lorentz curve, it calculates the distribution of income. Okay. And Gini coefficient, it calculates the degree of income inequality. So the Gini coefficient cannot tell the distribution of income, because to tell the distribution of income you have to give a range or you have to tell the distribution. But the Gini coefficient is only a term, is only a single number. So it tells the degree of income inequality. Phillips curve, it shows the relation between inflation and unemployment so it shows that the inflation, Phillips curve shows that the inflation and the unemployment have inverse relationship. When inflation is increasing, unemployment is decreasing, and when inflation is decreasing, unemployment is increasing. So that is correct. So only third was correct. Okay. So the Lorentz curve shows the distribution of income, and the Gini coefficient measures the degree of income inequality. Melbourne's plan model adopted in India in the mid-50s aimed at what? So we have to be a little faster because we have only reached till 35th question and we have 100 questions to go. Okay, so this is a revision session. So where we are trying to have some concept clarity also. So let's move a little faster now. Okay, Melbourne's plan model, this was introduced in which 5-year plan? Tell me that Melbourne's plan model, this was adopted in India in mid-50s, and this aimed at setting up heavy industries which were capital intensive. So the heavy industries had to be set up. That heavy industries are usually capital intensive only. Okay, so yes, correct. In the second 5-year plan, the PC Melbourne's model was adopted, and under this model there was the idea of the setting up of heavy industries which were capital intensive. Now tell me that in the remembrance of the PC Melbourne's model, or in the remembrance of the late Professor PC Melbourne's, which day is celebrated in our country, and on which date that day is celebrated in our country? So in the remembrance of the late Professor PC Melbourne's national, yes, Sorish is saying yes, very correct, very good. And on which day? So the National Statistics Day is celebrated every year in our country in the remembrance of the late Professor PC Melbourne's, and this National Statistics Day is celebrated on 29th June. Yes. What was the theme of this day? That also you need to remember and be prepared. Okay. Which of the following statements is not correct? So you have to tell that which of the following statement is not correct. The first 5-year plan was launched from 1st April 1951. So this is correct. The first 5-year plan gave emphasis on heavy industrialization. This is wrong, because the first 5-year plan gave emphasis to the agriculture, to the price stability, and to the power and transport. The first 5-year plan was from 1951 to 1956. That is correct. The first 5-year plan was based on Harrod-Domer model, and the second 5-year plan was based on PC Melbourne's model. So the only wrong statement was B. So B was the incorrect statement. Next is, which of the following is not the correct match? Which of the following is not the correct match? That you have to tell. So fiscal deficit means that excess of total expenditure over total receipts less borrowings, correct. Budget deficit, total expenditure over total receipts, correct. Revenue deficit, total expenditure over total revenue receipts. So this is incorrect, because revenue deficit means total revenue expenditure. In the total expenditure, there is the revenue expenditure and the capital expenditure. See, in the budget, we have the expenditure and receipts. in the budget, there are the expenditure and the receipts. Expenditure means there is the revenue expenditure. So in the expenditure, there is the revenue expenditure and capital expenditure. In the receipts, there is the revenue receipts and the capital receipts. Remember one thing very clearly, that when we talk about the capital, we are always talking about the assets and the liabilities. So in any question, if there is the mention that which of the following comes under the capital budget, or which of the following comes under the capital expenditure, capital receipts, so correlate it with some asset or liability. If it is correlating with the asset or liability, it will come under the capital budget or capital expenditure, capital revenue. Okay, so we will see some examples and you will be able to understand. So revenue deficit, excess of total revenue expenditure over the total revenue receipt. So this was the answer. Okay, dash is the change in cost of goods and services but does not include those from food and energy sectors. So which kind of inflation it is? Retail inflation is the consumer based inflation for the retail prices. Hyperinflation, when the inflation is increasing very fast and it is in double digits, in 20, 30%, 100%. Core inflation is the inflation where we are not taking into account the food and energy sectors. So core inflation is the inflation that talks about the increase in the prices of the goods other than the food and energy sector. Stagflation means that there is stagnation, the growth is not happening, as well as there is inflation in the country. Okay, so there is high unemployment and high inflation in the country. So that is stagflation. Next is Monetary Policy Committee of RBI uses which of the following index data to control inflation? We have said that the RBI has the target of 4% plus minus 2%. So this is actually the consumer price index that we are talking about. Okay, so this is the index that the Monetary Policy Committee uses. So yes, A is the correct answer. Next is, you have to see the assertion and the reason and give the right answer of this question. So devaluation can correct the imbalance in the balance of payments. Devaluation means what? In the fixed exchange rate system, where the exchange rate was being controlled by the monetary policy of monetary authority of the country and the government of India. So there the devaluation means that the government of India or the monetary authority of the country was decreasing the value of the currency, that is Indian rupees here. Deliberately, the value of the currency is reduced against the foreign currencies so that our good can be cheaper. Okay, so let's say that rupees, 1 pen was rupees 50 and $1 was equal to rupees 50. So we have to give rupees 50 to get $1. So the foreigners, the Americans had to give $1 to get 1 pen. Now $1 is equal to rupees 100 because there is the devaluation that has happened. The value of rupees has decreased. We have to give more rupees to get $1. But now the 1 pen is equal to $0.5, and that's why the foreigners will be very happy to get our stuff, to get our products, okay, goods and services. So devaluation can correct the imbalance in the balance of payments, as it can increase the exports and it will decrease the imports, because for us the dollar has become expensive and for them the rupees has become cheaper. Devaluation raises the price of imported goods and reduces the foreign price of exports of the devaluating country, and that's why yes, A is the correct answer here. Okay, so devaluation is the deliberate downward adjustment of the value of country's currency with respect to the other currencies. Okay, the capital account convertibility of the Indian rupee implies. So here the capital account convertibility, first of all, what is the capital account and what is the current account? So in the balance of payments, balance of payment means that we are keeping a systematic record of the transactions or the trade that we are doing with the other countries, that the residents are doing with the non-residents. So in this we are doing some trade, we are trading the goods, we are importing and exporting the goods, we are trading the services, we are exporting and importing the services, as well as we are having the transfer payments, that is we are sending the remittances to our families abroad and the families abroad are sending the remittances to the people in India. The capital account means that we are investing in some other countries are investing in India, we are taking loan abroad, loans are being taken from India, so that is capital account. So here the right answer is C, because the Indian rupee can be exchanged by the authorized dealers for the travel. So the travel purposes will come under the current account. The trade in goods and the services will come under the current account. So here we are talking about the capital account convertibility. So it is talking about the assets. So the capital account, that is we are talking about investment. So here the C is the correct answer, because the Indian rupee can be exchanged for any major currency for the purpose of trading financial assets. That is we are talking about investment. So when we are talking about investment, we are talking about the capital account. So first we have to check that yes, we have talked about the capital account, and here convertibility means that we can exchange the currencies for the capital account transactions, for the capital account for the investment and the loan. Okay. So here C was the correct answer. Next is, consider the following statements. The price of any currency in international market is decided by what? So the currency, the price of currency, that is the value of rupees and the value of US dollars and the value of pound, the value of sterling is being decided by what? It is decided by the demand for that currency. How much the currency is being demanded in the market, as well as the stability of the government of the concerned country. The US dollar is considered safer. Why? Because there is more trust in the developed countries. Okay. So it is these two on which the price of any currency, the value of any currency is dependent on. The economic potential of the country. So how much potential Africa has, or how much potential some countries in some continent has, or how much potential India has. So on that basis, the value of the currency cannot be determined. It is determined on the demand for currency and the stability of the government. So here the correct answer is B. Yes, absolutely correct. Next question is, both the foreign direct investment and the foreign institutional investor are related to the investment in a country. Which of the following statements best represent an important difference between the two? So the foreign institutional investor helps bring the management skills. That is not true. First of all, foreign portfolio investor or foreign institutional investor, they are investing in the shares, they are investing in the bonds, they are investing in the securities without taking control of the company. FDI means that the control of the company is going to the hands of the foreigner. Okay, so when the control of the company is in the hands of some foreign company, so that foreign company will provide better management skills. So that is provided by FDI, not FII. FDI only brings capital, so FII, that is the foreign institutional investors, they only bring in money. FII helps increasing capital availability? No, it is FDI that helps. So FII helps in increasing capital availability, that is true. The FII, that is bringing the capital, that is bringing the money in the country, okay, through the buying the shares, through buying the bonds and such. FDI targets specific sectors, so that is correct. So foreign direct investment, the direct investment is coming from the foreign countries, and that is for particular sectors where they think that it will be better for development, for their, like better for profits for their country, okay. So this is correct. FDI flows only into the secondary market. It is the FII that usually flows in the secondary market. Okay, FDI targets the primary market. Okay, FII is considered to be more stable. No, FDI is considered to be more stable. Okay, so this is the basic difference between the FDI and FII that you can read. The FDI, it is like setting up the factory or taking the ownership or taking the authority in the factory, in the company. So FDI is more stable. It is coming for a longer period, because when you are establishing a company in some country, so you will be taking care of that company. You cannot open it today and close it the other day. But the FII, when you are investing in the bonds, when you are investing in the shares, so you can buy it today, you can sell it tomorrow. So FII usually happens in the secondary market and the FDI usually happens in the primary market. Okay, FII can happen in the primary market also. So FII can happen in the primary and secondary market, but the FDI usually happens in the primary market, because here we are directly talking about the establishment of the company and such. Okay, so now coming to the next question. In India, CPI, rural urban combined, is published by the dash and the CPI. So the CPI, that is the consumer price index for the rural, for the urban, for the combined is published by dash, and the CPI for the industrial workers, for the agricultural laborers is published by the Labor Bureau. So Shikhar Pawar, thank you for the good wishes to all the other aspirants. I hope that the people that are really preparing with their hearts and they are putting the effort, so they should be able to clear the examination. So let's just take it in the positive sense that, and thank you for your good wishes to all the serious aspirants. So now CPI for the rural, urban and combined. So it is released by the NSO, that is under the Ministry of Statistics and Program Implementation. Okay, so remember this clearly, that the CPI for the rural, urban and combined is published by the Ministry of Statistics and Program Implementation. CPI for the industrial worker and the agricultural labor is published by the Ministry of Labor and Employment. Next is in an international agreement linked to the UNFCCC, United Nations Framework Convention on Climate Change, which commits its parties by setting internationally binding emission reduction target. So which of the following protocol, first of all, which of the from the first line itself you should be able to tell that which of the following protocol is linked with the UNFCCC that provides the internationally binding emission reduction targets. So I'm getting the right answer, that is Kyoto Protocol. So that is absolutely correct. It is Kyoto Protocol, that is an international agreement that is linked with the United Nations Framework Convention on Climate Change. So in this convention, it was said that we have to reduce the greenhouse gases. We have to stabilize the greenhouse gases to such a level that we can stop the anthropogenic or the human interference with the climate. Okay, so that the climate change can reduce. And the Kyoto Protocol is also related to that only, that we have to reduce the greenhouse gases by providing the internationally binding emission reduction targets, so that the greenhouse gases can be stabilized at a low level, so that human interference can stop with the climate. Okay, so that is Kyoto Protocol. Now coming to the next question, that is which of the following is or are long-term objectives of our 5-year plans. So there are the 4 long-term objectives of the 5-year plan. You have to tell that which of the following is or are the long-term objective of our 5-year plans. So here I am getting the B answer, that is correct. So the 4 objectives are the economic growth. So the 5-year plans had the 4 objectives: economic growth, self-reliance, the social justice, and the 4th one was the modernization. Social justice and reduction in inequality. And the 4th one was the modernization. Okay. So these were the 4 objectives. Modernization means that we should stop using the obsolete techniques. We should use the modern techniques, as well as modernization means that the mindset of the people should also modernize, should also improve, that the mindset of the people should also change. So that is also modernization. Okay, so not urbanization but modernization was one of the 4 objectives of the 5-year plan. Now coming to the next question, that is regarding the Niti Aayog that came after the Planning Commission. So the 5-year plan stopped as the Niti Aayog came. Okay, so Niti Aayog was formed on 1st January 2015. Niti Aayog is chaired by the Prime Minister of the country. The full form of Niti Aayog is National Institution for Transforming India. The Niti Aayog is a policy think tank of the government of India. So the first three statements are wrong. Only the 4th statement is correct. So yes, absolutely correct. Okay. So Niti Aayog formed on 1 January 2015, chaired by Prime Minister of the country. Full form is National Institution for Transforming India, and it is the think tank of the government of our country. Next is which of the following? I have told you that there is in the budget, there is the capital budget and the revenue budget. Okay, capital budget has capital expenditure and the capital receipts. The revenue budget has revenue expenditure and the revenue receipts. Okay, in the revenue receipts, all the receipts that the government is getting without caring about the assets and the liability. So that is the revenue receipts, that is coming from the taxes and coming from the non-tax revenue receipts. Okay, so that is the fines and such. See, the capital expenditure is the expenditure that is happening to increase the assets in the country and to decrease the liability of the government. That is to decrease the loans of the government. Capital receipt is the money that the government is getting. So this is the budget of the government. So the government is spending and getting some money. So capital receipt is the money that the government is getting by reducing the asset, by doing the disinvestment, by selling the asset and increasing the liability. That is taking the loan. From this also the government is getting some money. So the revenue receipt is the money that the government is getting without reducing the asset and without increasing the liability. So the dividends and profits from the public sector undertakings or public sector enterprises, it is not reducing the asset of the government and it is not increasing the liability of the government. So this is correct. It comes under the revenue receipt, that is non-tax. Interest payments received by the government, again it is not decreasing the asset, it is not increasing the liability. It is the interest payments that is received by the government on the money lent by the government. Grants that is received by the government, the grants are not loans, they are not aids, and that's why they also come under the revenue receipts. Loans received by the government, so they increase the liability, that's why they cannot come under the revenue receipt. Recovery of the principal amount of the loan, so that is reducing the asset. So the government has given the loan, that is the asset of the government. When a bank gives the loan, that is the asset of the bank. So when the government is giving the loan, that is the asset of the government. When the loan is coming back, that means the interest payment the government will not be getting now. So that is reducing the asset from which the government was earning the money. So that should come under the capital receipts and not the revenue receipts. So only the 1, 2, 3. That is D was the correct answer. Okay. Now coming to the next question, that is regarding the purchasing power parity. Okay, the different countries, the exchange rate is compared of the different countries by taking the basket of goods. So it is a popular metric that compares different countries' currencies through a basket of goods approach. So we are comparing the purchasing power. We are trying to equate the purchasing power of different countries. That $1 can buy one burger in the US. Similarly, 70 rupees can buy one burger in our country. So that's how we are trying to see the exchange rate between the different countries by comparing the goods, the same McDonald's burger, same good in different countries. So that is the purchasing power parity. India is the third largest economy in terms of purchasing power parity, just behind US and China. So that is also correct. This is also correct. PPP exchange rates are used to convert the national poverty lines from some of the poorest countries in the world to determine the global poverty line. So that is also correct. So here the D was the correct answer. Okay. So here you can read about the purchasing power parity, and we are at the third number after the US and China. Coming to the next question, which of the following items is classified as a capital receipt in the budget for the government? So I have told you capital receipt means decreasing the asset. The government is receiving the money by decreasing the asset or by increasing the liability. Receipt from the collection of income tax, this is not the liability of the government, this is not the asset of the government. So this should come in the revenue receipt. The taxes, the fines and such will come under the revenue receipt. The borrowings made by the government from the public. Borrowing means increasing the liability of the government. So this should come under the capital receipt. So this is the answer. Okay. John Maynard Keynes' statement that government interference is needed in the economy at times. Which of the following can be true? So a policy of annually balancing the budget, this can never be true for a country like India. Okay, because we cannot, COVID-19 is happening, the trouble is coming in our country, the recession can happen in our country. In that situation, the government should never think of balancing the budget. Deficit spending during some recession. So when recession is happening, that means when the demand is low, the price of the commodities are low, the production is happening low, the employment is low, as less people are used for producing less goods. So employment is low, and that's why the income is low, the demand is low. In that case, deficit spending, that means expenditure of the government should increase, and the taxes taken by the government should reduce so that the demand in the country can increase. So this is correct. The contractionary fiscal policy should happen during the boom. During the phase of the boom, the demand is very high, and to control that demand, the government has to reduce the spending and increase the taxes. During the recession, I have told you the expenditure has to increase and taxes has to decrease. That means expansionary fiscal policy has to happen during recession. So only the B statement was correct. Okay. Next is, which of the following is not an indicator to measure the multidimensional poverty index? So there is the multidimensional poverty index. So you have to tell that which among the following is not an indicator in the multidimensional poverty. So again, this is a very easy question. You should be able to just give the answer through some logic. And here I am getting the D answer, that is correct. Electricity, sanitation, cooking fuel, they all are considered the basic necessities, and that's why they come under the multidimensional poverty index, that the people should have these basic necessities. You can have any profession, that doesn't come under the poverty index. Okay. So the health, education and living standards, they come under the multidimensional poverty. There are the 10 indicators. In the health, there is nutrition and child mortality. In the education, there is the years of schooling and school attendance. In the living standard, that is the basic necessities that you have: cooking fuel, sanitation, drinking water, electricity, housing and assets. Okay. Multidimensional poverty is released by the UNDP and was launched by the UNDP and the OPHI. Okay. Now coming to the next question, if the union government is said to be following a path of fiscal consolidation. First of all, fiscal consolidation means that to improve the fiscal health of the country, that is to reduce the fiscal deficit in the country, that is to reduce the borrowing requirement of the government. So that is fiscal consolidation. Then which of the following statement is or are correct, that you have to tell. So fiscal consolidation means reduce the fiscal deficit and reduce the borrowing requirement. So the government is borrowing freely, that should not happen. Fiscal deficit of the government increases, that should not happen under fiscal consolidation. Fiscal deficit indicates the amount of government borrowing for that particular year, that is correct. Fiscal deficit means total borrowing requirement. The FRBM Act gives the targets for fiscal consolidation in India, that is correct. The FRBM Act is the one that is providing the targets for the fiscal consolidation. Okay, so here the government intends to bring the fiscal deficit below 4.5% of the GDP by 2025-26. The FRBM Act has actually given the target of 3% for the fiscal deficit with 0.5% additional leverage. Okay, so in total 3.5% is the total limit that has been given by the FRBM, that the government of India is not able to meet because of the COVID. Also the fiscal deficit was quite high in our country. Okay. So this is the basic idea of the fiscal consolidation and the FRBM Act that provides the target for the fiscal consolidation in India. The target is 3% with 0.5% leverage. When the union government borrows, that is take loans, external or internal, under which component of the union budget does it get accounted? So the government is receiving the money, that is, it is a receipt. So it is a capital receipt or revenue receipt. So when the government is borrowing, that means increasing the liability, that means it should come in the capital. So it should come under the debt creating capital receipt, because here also the two are given, non-debt and debt. So non-debt means we are not caring about, we are not catering to the loans. So debt means that okay, it is a loan creating capital receipt. So here the liability is created, that means it is creating debt. So in the capital receipt also there is debt creating and non-debt creating. Okay. Which of the following is not a part of revenue receipt? The receipts from the collection of interest amount from its debtor, the interest is not the asset or the liability. So they should come under the revenue receipt. Corporate tax should come under the revenue receipt. Dividends profits should come under the revenue receipt. Disinvestment means decreasing the asset. That should not come under the revenue receipt. So here the D is the answer. Here the D is the answer, because disinvestment means that you are reducing the asset. So that should come under the capital receipt. Okay. Which type of fiscal policy is being described in the following lines? This policy is designed to boost the economy. That is to boost the demand in the country, to boost the production in the country. It is mostly you, by seeing this only, you should be able to tell that it is the expansionary fiscal policy. Okay. It is mostly used in times of high unemployment and recession. It leads to government lowering the taxes, okay, lowering the taxes and increasing the expenditure. So it is expansionary fiscal policy. In budgetary terminology, effective revenue deficit is the difference between what? So effective revenue deficit is equal to revenue deficit minus the grants for the creation of capital assets. Capital assets. Okay, because the grants, see, the grants come under the revenue receipts. The grants come under the revenue expenditure, sorry. The grants come under the revenue expenditure. The grants are given by the government of India, the central government, to the state or the union territories. So when the expenditure is being done by the central government, so it comes under, the grants come under the revenue expenditure. So from the revenue deficit, that is the revenue expenditure minus revenue receipts, we have to deduct the grants that have been given for the capital assets, because here the capital formation is happening, so that is good for the country. So it should come under the effective revenue deficit. So the revenue deficit is, let's say, 200 and the grants that is given to capital asset is 50. So here the effective revenue deficit will be 150. Okay. So next, dependency ratio in India is declining because of which of the following the dependency ratio in India is declining? So you have to tell me that. So the dependency ratio, that is the dependent population we are talking about. So the dependent population is the 0 to 14 age population and 65 above population. That is old age population is the dependent population. The young population is from 16 to 64. This is the young population, that is the working population also. Working population. So if the dependency ratio in India is declining, that is the dependent population in India is declining. That is because the population of the working population in India is increasing. That is the population of 15 to 64 years in India is relatively high. That's why we can say that the dependency ratio in India is declining. Okay, so you can read the basic idea of the dependency ratio and such. The dependency ratio is low and the working age population is high in our country. The dependents are the people younger than 15, that is 0 to 14 we can say, or older than 64. To the working age population is from 15 to 64 in our country. Okay, which of the following best defines the meaning of social movement? So a very easy question, but you should have the basic understanding of the social movement. So here, an organized effort by a large number of people to fight against the government. Can we say that this is a social movement? Next is organized effort by a large. Whenever we talk about one person, so that cannot come under the social movement. So we should talk about the organized effort, okay, by a large number of people to bring about or impede the social change. So this is correct, that when a large number of people, the organized effort is happening to bring about or impede the social change, then we can say that this is the social movement. Okay, so D was the right answer. Try to give the right answer of this one. Which instrument of monetary policy is being described in the following lines? It is the share of NDTL that banks shall maintain in safe and liquid assets such as government securities, cash and gold. So if the bank is maintaining the money in the liquid assets, that is the government securities, or the bank is maintaining the money for the gold and the cash, so that is the yes, I'm getting the right answer, B. That is statutory liquidity ratio is the percent of the deposits that the bank has to keep with itself in the liquid assets. Okay, next, so you can read about the SLR. Next is, which of the following is not released by the UNDP annually as part of its Human Development Report? So the HDI, that is the Human Development Index, and the Human Development Report, they are very important. Okay, so you have to tell that under which of the following is not released by the UNDP. So it is the Global Gender Gap Report. Okay, it is actually the Global Gender Gap Report. So UNDP annually released SDR with 5 composite indices. You can see that it is the Gender Development Index, Gender Inequality Index, Multidimensional Poverty Index, and the planetary pressures adjusted human development index and the basic human development index. Okay, so yes, very good. So Priyanka is saying that it is released by the World Economic Forum. Correct. So the global gender gap report is released by the World Economic Forum. Next is, which of the following is or are correct about gender budgeting? So gender budgeting has become quite a good, quite a recent concept and quite an important concept. So it is a tool for gender mainstreaming, that is correct. It is a tool to bring the gender into the mainstream, to talk about the gender and to talk about the equality that should be brought in the gender. Okay. Gender budgeting seeks to create a separate budget and seeks affirmative action to address specific needs to women. So here, this is incorrect. This is incorrect. The gender budgeting does not seek to create a separate budget, but it seeks affirmative action to address specific needs for women. So in the gender budgeting, there is no mention of the separate budget, but it is mentioned that there should be affirmative action that should be taken for the needs of women. Gender budgeting recognizes that if gender disparities are to be addressed, adequate monetary allocations has to be made for the achievement of the desired outcomes. Okay, because the awareness has to be created. For that also the money is required. So here the first and third were correct. So here the C is the correct answer. Okay. So in the gender budgeting, it is a powerful tool for the gender mainstreaming, does not seek to create a separate budget but seeks affirmative action to address the specific needs of women. Transfer payments are a part of current account. Okay, I have told you in the balance of payments that the trade in the goods, trade in the services and the transfer payments, they are part of the current account. Okay. Which of the following economics concept does not include the transfer payment? So you should be aware about this. This is wrong, as here it is written that it seeks to create. No, gender budgeting does not seek to create a separate budget. So it was wrong. Okay. Okay, here the answer is B, national income. So the national income is the earned income. Here we cannot add the transfer payments. Okay, and the personal disposable income, personal income, private income, they are the income in which we are only seeing that what is received. So in the private income, we are trying to see that what is received by the private enterprises and the households. They are received from the earned income or the transfer income. In the personal income, we are seeing the income that is earned by the households from the earned income or the transfer income. So what is received by the households. In the national income, it is a earning concept, where the transfer incomes are the unilateral incomes, where you are not doing anything for the other party and the other party is giving you the money, like the unemployment allowances or the old age pension. Okay. Which of the following is or are the part of liquidity adjustment facility? So you have to tell me this. So the liquidity adjustment facility has recently been modified, we can say, in which the repo rate is there. Now the reverse repo rate has been taken out, and the standing deposit facility is the floor of the LAF, and the margin standing facility is the ceiling of the LAF. Okay, liquidity adjustment facility. So the standing deposit facility, repo rate and the margin standing facility are the part of the LAF. So yes, C is the correct answer. So here you can see that the SDF has now become the floor of the LAF corridor, and that's why the SDF is less than the repo rate by 0.25% and the MSF is greater than the repo rate by 0.25%. SDF is the rate at which the banks deposit their money with the RBI without taking any collateral, that is the government securities, from the RBI. Repo rate is the rate at which the banks borrow the money from the RBI by providing the collateral, that is government securities, to the RBI. MSF is the rate at which the banks take the borrowing from the RBI in the extreme or emergency kind of situation, and they can use their SLR securities till a level like the government securities that they are putting in the SLR. They can use these securities to be kept as collateral with the RBI. Okay, for taking the loan from the RBI in the emergency situation. In which year did the disinvestment process in the public sector enterprises in India start? I hope you remember the liberalization, privatization and globalization movement that started in which year? So you have to remember that, and you will understand that the disinvestment process in the public sector enterprises was under the privatization, that we have to privatize the public sector enterprises. So this privatization, this disinvestment process started in India from 1991. Okay, so the LPG reforms, the economic reforms were brought in the 1991, and the disinvestment of the public sector enterprises started in 1991. Next is the global financial. So we have understood that the financial stability report has been released by the Reserve Bank of India recently only. So the global financial stability report is released by which organization, published by which organization, that you have to tell. So here very easy answer it is International Monetary Fund that releases the global financial stability report. So the global financial stability report provides an assessment of the global financial system and the markets, and addresses the emerging market financing in a global context. Okay, like the financial stability report in India is the assessment of the financial system in our country, how the markets, how the banks are working, how the financial system is working. Similarly, the global financial report is for the assessment of the global financial system. It is released by the IMF, okay, published twice a year. And the World Economic Outlook is also released by the IMF. World Economic Outlook, in this the growth perspective has been provided. Okay, so other important reports has also been mentioned, that which report is released by which authority. Next is, consider the following statements regarding the agricultural credit in India. So Reserve Bank of India fixes the agriculture credit disbursement targets for the banking sector every year. Is it true or not? The domestic scheduled commercial banks are required to lend 18% of the ANBC or CEOB. We can say that from the net credit, from the net total credit, 18% has to be provided to the agriculture. Is it true? From the domestic scheduled commercial banks. Regional rural banks, same 18% they have to provide towards the priority sector lending to the agriculture segment. So I am getting the answer B. That is not correct. Anyone else? So here the correct answer is 2 and 3. It is, first of all, the first statement, the agriculture. So Ministry of Finance actually provides, the government fixes the agriculture credit disbursement targets for the banking sector every year, and the banks have consistently surpassed these targets. Okay, so it is actually the ministry, the government of India, that is providing the targets. Okay, not the RBI. So it, for the regional rural banks, 18% is the target for the agriculture, and for the domestic commercial banks also 18% is the target, sub target we can say, for the agriculture segment. Okay, so here I thought that this was a new point, so I have brought this for you. Next is, the term base erosion and profit shifting is best described as the mining operation by multinational companies in resource rich but backward areas. So base erosion, profit shifting, so this is more related to the tax evasion that is done by the multinational companies. So actually the base erosion and the profit shifting is in terms of the tax evasion by the multinational corporations. So, okay, yes, so B is the correct answer. Coming to the next question, consider the following pairs regarding different sectors of the economy. So consider the following pairs regarding different sectors of the economy. The primary sector, it contains all the economic activities under which the raw materials extracted are processed. So the processing does not happen in the primary sector. First of all, the processing happens in the secondary sector. The primary sector is utilizing the raw materials for the, the primary sector is actually producing the raw materials from the natural resources. Okay, land is used for producing the crops and such. So the processing, the manufacturing actually happens in the secondary sector. The economic activities are which take place while exploiting the natural resources fall under the primary sector. So they are actually flipped. So primary sector utilizes the natural resources to produce the raw material or to produce the crops and to produce the food. The secondary sector does the economic activity where the raw materials are processed, are manufactured. Okay. Quinary sector, highest level of decision making in the government and the private corporate sector fall under this. Okay. So this is the correct answer here is A. The correct answer, Mehak has given the right answer, Nikhil is giving the right answer. The correct answer here is A actually. Okay. So the primary sector exploits the natural resources for the production. Secondary sector processes as well as manufactures the goods and services. Tertiary sector provides the services. Quaternary sector is the knowledge sector. Research and development happens in the quaternary sector. Quinary sector is related to the top decision making authority or the management, top management. Okay, the brain behind the socio-economic performance. So A was the right answer. Okay. Next is, which one of the following issues the Global Economic Prospects report periodically? So I've told you that there are some reports that are very important. Those are released by the IMF, World Bank and the World Economic Forum. So these are some of the international reports that you should be aware about. Okay. So here the right answer will be, so the Global Economic Prospects is the report that is released by the World Bank, and it is a flagship report of the World Bank. Like the Global Financial Report is released by, Financial Stability Report is released by the IMF. That is released twice a year by the IMF. Similarly, the Global Economic Prospects is the report that is released by the World Bank. Okay. Which of the following subsector does not come under the service sector in India? So you have to tell that which of the following does not come under the service sector in India. So try to give the right answer of this question. Which of the following subsector? So it is real estate, transport and communication, defense service. So I am getting the answer B. That is not correct. Transport and communication, they come under service sector. Transportation services, communication services. So with the name itself we say services. Yes, Priyanka is giving the right answer. It is electricity, gas and water supply. Actually there is the processing that is happening and the manufacturing that is happening. Electricity is manufactured, it is processed, it is built. The gas, similarly the LPG supply is there, the water supply. Okay, so they are, the E is the correct answer. In the NSO, the National Statistical Office, has recently provided the GDP data in which there was a division that was also provided. Okay, so you can see that. So the industry involves the mining, quarrying, manufacturing, electricity, gas, water and other utility services is involved in the industry. Construction, because they are related to some kind of processing and manufacturing. In the services we have the transport, communication, trade, hotels, transport. So do not get confused in this. Okay. The value of spatial drawing right is determined by the basket of how many currencies? This you have to tell. So the spatial drawing right is issued by the IMF, International Monetary Fund. So it depends on how many currencies. So actually it depends on 5 currencies. Okay. So it is US dollar, Japanese yen, British pound, Chinese yuan and euro. So the spatial drawing right was created as a supplementary international reserve asset in the context, like it was the supplementary international reserve asset that only you are keeping in the international reserve asset, or in the reserve assets the countries are keeping the gold, the countries are keeping the foreign currency assets. So the country can also keep the SDR, that is it is neither a currency nor a claim on the IMF. It is a potential claim on the IMF that okay, the IMF should be providing this much of the help to the countries, and the SDR can be utilized by the countries when they require some particular currency. Okay, so the SDR value actually depends on the value of the 5 currency. Which of the following is incorrect about the Monetary Policy Committee? So it is a statutory institutionalized framework under the Reserve Bank of India Act 1934. So that is correct. RBI appointed committee led by then Deputy Governor. So there was a committee that was led by the Urjit Patel in 2014 that recommended the establishment of the Monetary Policy Committee. So this is also correct. So I'm getting the answer D. The Governor of Reserve Bank of India is the chairman of the committee. Yes, correct. The committee comprises of 6 members. 3 are from the RBI and 3 are are appointed by the Government of India. The MPC has to meet at least 4 times in a year. That is correct. So here the D was the correct answer. Remember that the RBI appointed a committee that was led by Urjit Patel in 2014 that has recommended the establishment of the MPC. So this was a new point that you need to remember. Okay, I hope you already know about it. Which of the following statements correctly describe the balance of payment? So you have to tell the basic definition of balance of payment. So here it is a systematic record, okay, that is same, of some economic transactions, wrong, all the economic transactions, of non-residents, wrong, of residents. So it is a systematic record of all the economic transactions that are done by the residents of a country with the rest of the world during a given period of time. So C is the correct answer. Yes, very good. So the balance of payment have current account and capital account. The current account, the visibles, that is the trade of goods. Invisibles, that is the trade of services. The factor incomes that are coming, or the income that is coming, the transfer payments that are coming. So all these come under the current account. Okay, capital account consists of the investment. It can be the foreign direct investment or foreign institutional investment, the loans and the banking. Capital comes under the capital account. Okay. Which of the following is not accounted for in the capital account under the balance of payment? So in the balance of payment, which of the following is not a part of the current account? Direct investment, of course, the investment comes under the capital account. External commercial borrowing, borrowing means lending, means loan, come under the capital account. Portfolio investment, it is an investment. Portfolio investment means foreign institutional investors are doing some, they are buying the shares, bonds, and it is a portfolio. So it also comes under the capital account. Remittances and grants. I have told you that the grants are not the loans or the aids, and they come under the current account. Okay. And the remittances, they also come under the current account. Okay. So here the right answer is C. Which of the following are the advantages of the foreign trade and investment? This you have to tell. So try to give the right answer of this one. It stimulates competition. That is correct. So if the foreign trade and the investment is happening, so there will be more competition from the foreign countries. It improves the resource allocation. That is also correct. So there is specialization that happens between the countries, that the country that is specialized in the production of some product, so that country should produce that. So the resource is allocated properly. Facilitates the international distribution of technology. So through the foreign direct investment, the foreign companies are setting up their subsidiaries or setting up their, they are owing the companies in our country. So through that, the new technologies, the modern technologies, they are coming in our country. So that is also true. It leads to the development of the human capital. That is also true, because the people are trained in our country for working in the subsidiaries or for working in the companies that are owned by the foreign companies. So all of the above are correct. Yes. In the context of balance of payment, what are accommodating transactions? So mismatches in the balance of payment records. So it is wrong. It is accommodating transactions, not records we are talking about. Okay. Current account transactions, no. Accommodating transactions are not current account transactions. Transactions, yes, I'm getting the correct answer. That is C. Transactions that are done to balance the surplus or deficit of balance of payment, that is accommodating transaction. So if surplus is happening, so to balance that, and if the deficit is happening, to balance that, the accommodating transactions are taken into account. For the profit maximization motive, the autonomous or the independent transactions are taken into account. Okay. So accommodating transactions and autonomous transactions are two different kind of transactions. Autonomous transactions are to balance the balance of payment. Okay. Fiscal stimulus is provided to different sectors of an economy to promote the growth. Okay, fiscal stimulus means some help is being provided by the government. Fiscal, whenever fiscal is there, government is there. Which of the following measure does not constitute the fiscal stimulus? So that you have to tell now. Increasing the taxes. So monetary incentives. Fiscal, yes, I'm getting the answer A, that is correct. So monetary incentives, yes, some expenditure is done by the government, some help is being given by the government. Export subsidies, yes, Export is being, like, the growth is happening here through the help of the government subsidies. Decreasing the taxes, that is also correct, because the fiscal stimulus means for the growth the government is decreasing the taxes so that the people have more money to spend. Okay, so increasing the taxes was not a part of the fiscal stimulus. Okay, stimulus package is the number of incentives and the tax rebates that are offered by the government to boost the spending, to boost the growth in the country. Whenever we talk about growth now, that means we have to increase the demand in the country, then only the production can be increased in the country, because the growth means increase in GDP. GDP means the value, the market value of all the goods and services that are produced in the economy in a financial year. So the production should increase, then only the GDP will increase, the real GDP will increase. Okay, with reference to the Financial Action Task Force, which of the following statement is or are correct, that you have to tell. Okay, so the FATF is the global money laundering and terrorist financing watchdog. That is, this is the institution that looks after the global money laundering and terrorist financing, that it does not happen. So that is correct. All permanent members of the Security Council, including China, are members of FATF. So this is wrong. Okay, because it should be including. It is an intergovernmental organization founded by an initiative of the G20. So this is wrong. It was founded by the G7 countries. Okay, so here the answer is C, that is correct, only one. So I hope you have understood the idea. You can read. The FATF is the global money laundering and terrorist financing watchdog. It sets the international standards that aim to prevent these illegal activities and harm they cause to society. FATF, we are talking about this because there was the amendment that happened in the KYC norms, so that they can be at par with the Prevention of Money Laundering, Managing of the Records 2005 Act and the FATF Act. Okay. Demographic transition is described as, so the demographic transition is happening. That means the change is happening. Demographic means that some population change must be happening. So it is a stage in which, no, it is a process. Transition means a process where there is decline in birth rate. Transition means any kind of transition can happen. Process of change in society's population over time. So that is correct. Okay, it is the change in a society's population over time. So yes, C was the correct answer. And there are the 5 stages of the demographic transition. At the start, the birth rate is high, the death rate is high. After some time, the death rate is high. The death rate has started reducing. The birth rate is still high, and that's why there is huge population that is coming. Now the death rate is low. The birth rate is also started to go low, and after a time, the birth rate has become very low, as like equal to the death rate. So these are the stages of the demographic transition. With reference to gross value added, which of the following statements is or are correct, that you have to tell. So it is defined as the value of output. So gross value added. Value added means what value has been added. So that means value of output minus value of intermediate consumption. This is the value that has been added. Okay. So let's say value of output. So this pen, so the plastic that has been used, so value of output, the plastic was 20 rupees and the pen was 500 rupees. So in total, the value of output that has been created in the economy is 520. From this, we have to deduct the value of intermediate consumption because the plastic has been used in this. So the value of plastic has been added in this 500. So we have to deduct the value of intermediate goods. Okay, so this is GVA, gross value added, that actual value addition that has happened in the country. It is estimated by the National Statistical Office, that is correct, that is under the MOSPI, Ministry of Statistical and Program Implementation. From an economics perspective, it represents the supply side, yes, and the GDP represents the expenditure side. In India, GVA is calculated at basic prices, that is also correct. So the E is the correct answer. Excess of total expenditure. Excess of total expenditure over the total receipts less borrowings. This is fiscal deficit. Okay. Less borrowings and interest payments. So that means from the fiscal deficit, from this we are also deducting the interest payments. So that is primary deficit. Okay, so remember the formula that from the fiscal deficit, when we deduct the interest payments, we get the primary deficit. This fiscal deficit, we can open the formula and we will get the total expenditure minus total receipts excluding borrowing. Okay, so the B was correct. Which among the following defines the marginal standing facility rate? So you have this question. Now try to give the right answer of this question. The rate at which banks place their surplus fund with the RBI? No. We are not talking about the deposit. The rate at which banks can borrow against their excess XLR securities to meet additional liquidity requirement. So yes, that is correct. That in emergency kind of situation, the banks can borrow from the RBI using their government securities that they have kept in the SLR, in the statutory liquidity requirement, and to a limit. Okay, to a limit they can use the government securities that they have kept in the SLR. The rate at which Reserve Bank, no, this is not correct. The rate at which banks borrow funds from the Reserve Bank against eligible collaterals. So this is repo rate. Okay, because borrowing of the funds in the normal situation, in the eligible collateral kind of situation, should be repo rate. Okay. Next is, if India is facing continuous depreciation of rupees. So depreciation of rupees is happening against dollars and inflation is high. What will be the step taken by the Reserve Bank of India? So what should RBI should do? For the inflation, the RBI should reduce the rupees in the economy. Because if inflation is very high, that means people have too much money in their hand and the people demand is very high. So there should be the reduction in the rupees. That is, the RBI should buy the rupees, and depreciation of rupees can be stopped by selling the dollars. Okay, because the rupees value is decreasing against the dollars. That means dollar value is getting very high. Dollar value is very high because the demand for dollar is very, very high and the supply for dollar is less. Then only the price of a currency can be high. Okay, so the value of dollar is becoming higher and the value of rupees is decreasing. The value of something become very high when the demand is high and the supply is low. And that's why the RBI has to start supplying the dollars so that the value of the dollar start decreasing and the value of the rupee, the depreciation can reduce of the dollar. So that's why the D was the correct answer. Which of the following term denotes the average income earned by a person in India? So average income earned per person or average income earned by a person in India. So that is per capita income, very easy. Okay, so that is per capita income. Okay, World Economic Outlook report is published by. So recently in the financial stability report, it was mentioned that the percentages were mentioned from the World Economic Outlook report that is released by International Monetary Fund. Okay, so this we are going to discuss that what was that percentage that was discussed from the World Economic Outlook. But you should be aware about such kind of reports. You should be aware about such kind of indexes, if any. Okay, so that are in news recently. So yes, the correct answer is IMF. The IMF releases the Global Financial Stability Report and the World Outlook, Economic Outlook. First P in the PPP, which is an often used acronym of international economics, stands for. So PPP we have just discussed. It is a very important concept in the international economics, and this is a previous year question. Okay, it was discussed in 2018, I guess. So it is what you need to understand that this is important. Okay, so purchasing power parity. So here the right answer is purchasing. Okay, because we are talking about the first P. So such kind of full forms can come in the examination. So be aware about such. Okay. Which of the following option is not a feature of spatial drawing right? So I have told you that we will discuss 2-3 questions on SDR. So you are very clear about this. And this is the last question where we will discuss everything about the SDR, all the important details. So it is an international reserve asset. That is correct. Created to supplement its member countries' official reserves. That is correct. So all the countries have the reserves. So to supplement those reserves, that not like huge amount of gold, huge amount of foreign currencies. Other than that, SDR can also be utilized for the reserves. Value of the SDR is based on the basket of 5 currencies. Yes, the valuation basket is reviewed and adjusted every 5 years. They serve as a currency. So this is also correct that valuation of the basket is reviewed and adjusted every 5 years. Okay, and on that valuation the SDR is based on. Valuation of basket means that the currency should be included in the basket or should not be. how much weightage should be given to which currencies, such. They serve as a currency that member countries can freely utilize as a claim. Can this be true? No. SDR is not a currency, it is a basket of currencies. So there are 5 currencies that are involved in this SDR, and SDR is not a currency, it is a potential claim, it is not even a claim. It is a potential claim that a country can do. They are allocated to the members that elect to participate in the SDR department. That is also correct. And all the members of the IMF are actually a part of the SDR department. Okay. So SDRs are only allocated to IMF members that elect to participate in the SDR department. Currently, all the members of the IMF are participants in the SDR department. Basket of currencies defines the SDR. SDR currency value is calculated daily, and SDR is not actually a currency. We should not even be using. It is a basket of currency. Okay, that's why it is not a particular currency, and it is a potential claim on the freely usable currencies of IMF members. Which industry is known as sunrise industry? So recently there is the unicorn that is quite in news. Unicorn and unicorn startups, and this is quite in news. So they are the startups, they are the private startups that get US like more than $1 billion dollar of the valuation. Okay. Similarly, there is the sunrise industry. So sunrise industry, you have to tell. So Priyanka is saying D. Yes. Rohit is also saying D. It is actually the food processing industry. So sunrise industry is one that is new or relatively new, is growing fast, and is expected to become important in the future. So it is actually the hydrogen fuel production, petrochemical industry, food processing industry, space tourism, and online encyclopedias. So sunrise industry, just have the basic idea that they are the industries that are new or relatively new, which are growing very fast in the world. Which of the following best describes the import substitution? So here, substituting the imported goods with locally produced goods, increasing the export of the countries, protecting the domestic service industry. So here, just by seeing the A option, you should be able to tell that yes, A is the correct answer. We try to substitute the imported goods with the locally produced goods. So this is the correct answer. This is the import substitution that is happening. So it is encouraging the domestic production by raising the barriers against the imports of the goods from the foreign countries. Foreign trade in India is promoted and facilitated by the Directorate General of Foreign Trade under which ministry? So recently the foreign trade policy was also released. I hope you have read about it completely. So foreign trade policy, foreign trade in India, it is promoted under which ministry? You should be aware about that. Okay, you should be aware about that. So it is not B, it is not A. Yes, it is D, that is Ministry of Commerce and Industry. Okay. So the foreign trade in India is promoted and facilitated by the Directorate General of Foreign Trade under the Ministry of Commerce and Industry. And the DGFT also implements the foreign trade policy of India. Okay. So be careful about this. Why is India regarded as a country with a demographic dividend? So try to give the right answer of this one. So here, the demographic dividend means that the dependent population is less and the working age population is more. That is demographic dividend. So here I am getting the answer B. It's high population in the age group of 15 to 64. Yes, that is correct. That demographic dividend means that we have more working age population and less dependent population. That is the population less than less than 15, and the dependent population is more than 65 of the age. So we have more working age population. That's why it is said that India has the demographic dividend. Okay, which term is used to describe the grouping of countries committed to remove all the barriers to the free flow of goods and services between themselves? Is it the free trade area, it is the custom union, common market, economic union, or none of the above? So group of countries that are going to remove all the barriers to the free flow of goods and services between themselves. So yes, it is a free trade area. Okay. The Green Climate Fund aim to expand the collective human action to respond to climate change. So here we are talking about the climate change. The fund aims to mobilize funding at a scale to invest in low emission and climate resilient development on our home planet. So like you should be aware about this, that whenever we talk about the climate change, under which organization or under which convention should we talking about this? So we should be talking about this in the UN, yes, it is United Nations Framework Convention for Climate Change. This convention was made for the greenhouse gases to be stabilized at a low level, so that the human intervention can stop with the climate, so that the climate change does not happen. So under this convention, the Green Climate Fund has been provided. Okay. So the Green Climate Fund aimed to expand the collective human action to respond to climate change, and the Green Climate Fund was established by 194 countries. It is created by the UNFCCC. The fund aims to support a paradigm shift in the global response to climate change. So the main idea here is climate change, and when the climate change is there, we should directly link it with the UNFCCC. Okay. Consider the following statements regarding. So whenever we discuss about IMF, we have the financial stability in mind, we have the balance of payments in mind. Whenever we have the World Bank, we have development in mind in the countries. So whenever the climate change is coming, so you should be aware about the background, about some organizations, and then you will be able to answer the questions, typical questions also, comparatively easier. Okay. Consider the following statements regarding the impact of oil prices on the Indian economy. So it increases the current account deficit of the country. Is it true or not? The increase in the crude prices also further increase inflationary pressure. Is it true or not? If the oil prices continue to increase, the government shall be forced to increase the taxes or not. So here I am getting the answer C. That is correct. So we have to find the correct statement. So yes, the oil prices are increasing. That means the trade, oil is a good. So trade in good. So we will have to pay more for the oil import. That means the current account deficit can happen because the import will be more than the export. Okay. So trade good. Yes, it increases the current account deficit if the oil prices are increasing. The increase in the crude prices could also further increase the inflationary pressure. Inflation can increase, yes, because if the oil prices are increasing, the fuel prices are increasing, inflation will come in the economy. If the oil prices continue to increase, the government has to decrease the tax. That will lead to loss of revenue and deteriorate the fiscal balance. Okay, because if the petrol prices, if the oil prices are increasing, the government has to help the people, right? So it has to cut the taxes. Will be forced to cut the taxes, and that's why it will have a loss of revenue and deteriorate its fiscal balance. So C was the correct answer. The literacy rate in India is measured after which age? So this is a very easy question that you should be able to answer. It is a static question. Okay. So it is 5 years and above, 7 years and above, 9 years and above, or 11 years and above. So I'm getting the answer B now. So that is correct. It is 7 years and above. So the literacy rate in India is measured after 7 years and above. Okay. So the B is the correct answer. Consider the following statements with respect to the World Trade Organization. So to facilitate the implementation, administration and operation of a trade agreement. So which of the following is correct regarding the World Trade Organization? To carry out periodic reviews of the trade policies of its member countries, to promote the International Monetary Cooperation. So International Monetary Cooperation, it is more the work of the International Monetary Fund and not of the World Trade Organization. World Trade Organization should focus on the trade policies, and that's why 1 and 2 is the, yes, A is the correct answer. Okay, so you should have the basic idea of the important organizations and you will be able to answer the questions. Okay. Which of the following is not the function of the International Monetary Fund? So the IMF manages the international monetary system for global payments. Correct. Okay, monetary fund. IMF advises on macroeconomic policies and exchange rate. That can also be correct. It assesses and regulates the political sectors in the member countries. No, the countries are sovereign. There are many countries that are sovereign. Okay, the countries, the political system has to be as per the countries. So here the C cannot be the right answer. Okay, so C is the wrong statement. so you can read the other functions of the IMF and be clear about the functions of the IMF. The IMF is authorized to provide the financial assistance to nations facing the balance of payment discrepancies. It looks after the financial sector and the regulatory policies. It helps the countries. It monitors and advises in the macroeconomic policies, facilitates the international payments between the countries, and looks after the economic stability and growth. Okay. Poverty gap is defined as the ratio by which the mean income of the poor falls below the poverty line. So actually poverty gap is this only, that from the poverty line, the poor that are below the poverty line, the mean income, the average income of the poor. Okay, so that is the poverty gap, that from the poverty line how much below the poor people are. Okay, so A is the correct answer here. So here you can see this is the poverty line and this is the poverty gap. So according to World Bank, poverty gap is the mean shortfall, average shortfall from the poverty line expressed as a percentage of the poverty line. So how much on average, how much below the poor people are from the poverty line. If they are more, if many people are more below than the poverty line, that means it will take lots of efforts to uplift them. But if they are just slightly below the poverty line, that means with the less efforts also they can be taken out from the poverty. So this is the last question. As per the World Economic Outlook, so this has been recently been mentioned in the Financial Stability Report released by the IMF in April 2023. The global growth forecast for the 2023 is what? So the global growth forecast for the 2022 was 3.4%. That was given by the World Economic Outlook. So here tell me that as per the World Economic Outlook, the global growth forecast for the 2023, so I'm getting the right answer, that is 2.8%. Yes. So here 3.4% was the forecast for the 2022, and the World Economic Outlook has given the forecast that is 2.8% for the 2023, and the World Bank has given the forecast also, the OECD has given the forecast also for the 2023. Okay, so for the World Economic Outlook has given the forecast for the 2023 that the global growth expectation is 2.8%. Okay, so this was the last question for today. So thank you very much. You will get the PDF of the session by tomorrow in the Telegram channel. So I hope you liked the session, and I hope many of your concepts would have been clear today. Okay, if there is any confusion, any query, you can share with me. Thank you so much, Priyanka. Thank you, Jaqen, and thank you everyone. I hope you like the session, so I will not take much of your time. If you have any query, you can share with me. Thank you so much, Debashish, and do comment in the chat box also. Do comment in the comment section also. And now tomorrow your management session will be with Jalasar. So I know that he is preparing you very well for the finance and management section. I hope the ESI session has cleared many of your concepts. The basic concepts was the main idea, so that you have the clarity about many of the things. Okay. Question number 50. If you have any confusion, you can share. Okay. So here, which of the following items is classified as the capital receipt in the budget for the government of India? So capital receipt means that is related to the asset and the liability. Okay. So receipt from the collection of income tax, that is not related. Yes, there is going to be the session on government scheme. Keynes question. Okay. So 51, according to John Maynard Keynes, see what happens that the government can never have the balance in the budget. Okay, the government has, John Maynard Keynes believed that if the country is in the recession, so the government has to interfere, and in the recession what will happen, that the demand is low. So for that kind of condition, when the demand is low, the government have to spend more, and the government has to reduce the taxes so that the demand in the economy can increase. When the government is spending on building the roads, building the parks, so the demand will increase, right? and the tax is reduced, so the consumers will have more money to spend. So this is the kind of situation that is required for the recession. So for the recession, deficit spending, that is spending should happen more. Deficit means what? Expenditure is happening more and the receipts are less. So that is okay during during recession. Okay, deficit spending is okay during recession. Expansionary fiscal policy should happen during recession, that is the government spending should increase, taxes should reduce. And contractionary fiscal policy should happen during a boom. During a boom, demand is already very high. During boom, demand is already very high, so the government spending should reduce and taxes should increase so that the demand can be controlled, because demand is increasing very fast. Supply is not able to increase that much. So during boom, contractionary fiscal policy should happen. During recession, expansionary fiscal policy should happen. Deficit spending is okay during recession. The government can never have a balance in the budget if the country is in some kind of trouble. So like if in the COVID situation the government tries to balance the budget, so what will happen, that the government will not focus on decreasing the demand. The government will be focused on balancing the budget. That is very harmful for the country. So a policy of annually balancing the budget is not the target for any government around the world, especially for the developing countries. Okay. So balance, if the budget is balanced, that is good. But during the recession kind of situation, the demand has to be decreased, so the deficit or the government spending should be more and the taxes should be less. During the boom, the demand is very high, it has to be decreased. The demand is too much high, so the government should go towards the surplus, that the government should decrease the government spending and increase the taxes, that is the surplus should be targeted. Okay, any other question, or should I repeat it? Is it clear, Shorish? Is there any other query or any confusion? No problem at all. So thank you very much, everyone. And you can get the PDF in the Telegram channel, so you can join the Telegram channel. And thank you very much. If you have any query, you can mail us here, or you can contact us through this number. And thank you very much for being with me in the session. Do comment in the comment section to express that how you like the session. And tomorrow will be the management session, so be with Jalas sir in the management session, where you will get the complete understanding of the management concepts. Okay, so thank you very much, everyone. Thank you for joining. Have a good day to all of you.